Okay, so this is importance of proper trade planning. Proper trade planning is fundamental to success trading. It involves strategizing before entering a trade, which helps in managing risk, maximizing potential profits, and maintaining discipline in the volatile world of trading. Here's a breakdown for you guys that's going to help you to do better planning with your trades. Okay, so this is all about risk management. So this is going to be the first thing that I'm going to speak to you about. Making sure from previous video that setting a stop loss and take profits, I'm going to make sure that I drill it home and I repeat these things for you so that you can understand, not in every video, but maybe a follow-on video or later on, you're going to get reminded to do these things, because stop loss and take profits are going to be the reason to help you get in better trades, better results, staying in the game longer and protecting your capital. Controlling your risk exposure. Like I said, 1 to 2% will on per capital on each trade percent, no more. This will help you to get too emotional and make decisions that's going to help you to not make risky things in the heat of the moment. So, clear entry and exit strategies. You've got to have a clear entry and exit. Before you even step into the market, if you do not have a defined entry point, a good idea of where you're going to take the trade based on your indicators or your market analysis or any specific events, you've got to have an area where you say, right, I want to trade from this area to that area. Now, if you do not do that before you even get into a trade, you're going to lose. This is the reason why you see all these people on crypto Twitter. They have levels that they have as targets. They have an objective exit point and a defined entry point. The objective exit point will help you then to make sure that you know what means. So if you have a fair value gap you're trading from, my stop's usually below the fair value gap. That's where my stop goes. If it hits that and it eats the fair value gap, I'm out the trade. It should hold if you pick the right fair value gap with my strategy, and I understand which ones are the best ones to trade from. I know that really should hold. It might eat into it a little bit, but not take it fully out, and then bounce from there and go where we're going. So you've got to have clear entry and exit points. Being consistent. So once you lose a trade, don't think that your plan's shit. Like 9 times out of 10, most traders will just jack in the plan, go on YouTube and find another strategy on the scalping strategy on 15 or 5 minute charts or a 1 minute chart. I think that that's going to freaking work. Don't understand the fucking strategy. So how is that going to work for you by not reproducing your results? Get a plan, test your plan, like I've been telling you. Once you test your plan, you've got reproducible results. Also, impulse trading. Well-designed plan keeps you from having impulse like FOMO, and make sure that you're keeping out them random trades at bay, making sure you're contributing to a more disciplined trading approach. It's also going to help you with improved decision making. Reduce emotional influence, which means if you stick it to a plan and a predefined plan, you're going to reduce the emotional needs based on fear and greed. As well, clarity and analysis. With a clear plan, you know exactly what to look for in the market, meaning that your analysis is more focused and efficient. And adaptability. You have to have some basis for adapting your plan. If you find it's easier to adapt and change strategies as market conditions shift, or maybe if new information comes out on your strategy and you learn an easier way to make better trades, it's okay to change little things, but being consistent in that change and making sure that you do it again and again and again, that's where the adaptability comes in and the consistencies. Time management. You've got to be efficient with your time. Having a trade plan that doesn't work on the times that you're available to trade is not good for time management. It means you're not going to be very active in the market. It means you're not going to be very productive in the market. Understanding when you can trade and finding a plan that fits the way you trade at that point in time when you're coming to the markets is what you should be looking for. If you haven't got a defined trading plan or an idea of what you're going to do to take a trade and enter and exit, then this is the first thing you need to start looking at. Not how I'm going to get in the trade and make some money today, because if you haven't got a plan to make the money, how are you going to make the money? Okay, so effective trade planning is about more than just picking the right stocks or assets. It's about creating a comprehensive approach to trading that includes risk management, clear entries and exit strategies, consistency, and adaptability. This approach leads to disciplined, focused trading. which is vital for success in the financial markets. Just remember, a well thought out trade plan is a fundamental tool in a trader's arsenal, laying the groundwork for an informed, rational decision making trade solution that in a field is often dominated by volatility and emotion. Okay, so now you understand the importance of proper trade planning. I'll see you on the next video.